let's get a check on the regional banks, a good read on the health of the economy, kind of the pulse of things. This is credit. This is the lifeblood. The KBW Regional Banking Index up slightly so far this year. A strong 2024. Of course, we're up 25% or so in that period. Our next guest runs the largest bank in Washington state, WaFd, undergoing a shift in its business, making the decision to exit the single-family mortgage lending market after 107 years. Brent Beardall is the president and CEO. It's great to see you again. Welcome back.
Great to be here, Kelly.
So many different macro trends we've discussed over the years, from the commercial real estate crisis. Are we still in it or no?
Commercial real estate crisis, knock on wood, we've been right. There is no crisis.
You were right. You were at the time also leaning into a lot of multifamily, which still I think has been a stalwart. No,
It's been a juggernaut. It's been fantastic for us, and we'll lean in more to that.
You will. Okay. So, and that, of course, is happening now. People are saying we need more apartments again because we've had the glut and then the short. Anyway, on the home equity front, is that what this is about? No longer extending home equity lines of credit?
No, it's more than just home equity. It's first mortgages on single-family houses. So this is not a decision we took lightly. We've been doing it for over 100 years, and it used to be, right, the Bailey Construction and Loan. It's a wonderful life. You went in and you sat down with your banker and said, okay, here are my finances. Do I qualify for a loan?
Potter's not selling, he's buying.
That's right. Potter's buying. But the world changes, and if we don't change, then we risk becoming a dinosaur, becoming extinct. And what has changed is when you get a mortgage, do you move your primary depository relationship to where you have the mortgage?
No.
The answer is no. Right? Mortgages have become a commodity.
And they hop around. We all get those documents. Right? Oh, now it's owned by this servicer. Now it's owned by this servicer. You have to make a new account all over again.
There's zero loyalty from the bank that made the mortgage, and there's zero loyalty from the customer. So we had to ask ourselves, why are we doing it? And then the other fact is 70% of the mortgages made in the United States today are made by the U.S. government in one way, shape, or form. And we said, we're part of the 30%. Why? And if you look at it from a banking perspective, what are we doing? We're obviously trying to meet a need of the customer, but we're taking credit risk and we're taking interest rate risk.
And I just want to squeeze this in because we might have to go to the White House shortly, but this is also what blew up a lot of banks during the banking crisis a couple of years ago. When you lend long at 2% and all of a sudden rates go way up, your bank can be underwater. Is that partly what's going on here?
That is the interest rate, right? And this little device has exacerbated interest rate risk. And
how? How is and he's, by the way, if you're on the radio, you were holding up your phone. How has the phone exacerbated interest rate risk?
Because it is so easy to refinance your mortgage away. So a mortgage has something called negative convexity. Mm-hmm. Sorry for geeking out, meaning the mortgage is never more valuable than the day you make it, right? If rates go up, the bank's underwater, and you're going to extend how long you hold out. Everybody today, they're not leaving their mortgage because they have such great rates. And the opposite is true. If rates go down, the bank's like, yes, we have a rate that's above market.
So it's great for the consumer in part because the government makes it that way, but it's bad business.
It's bad business. And as a business, I say we want to do what's right for the consumer. And if we can't deliver the best product for the consumer, if they can get it at a lower cost elsewhere, let's get out of the business.
Is it good that the government is now basically running the mortgage show?
That's a really good question. I don't think so, but it's reality.
I try to ask good questions. Sometimes I do.
My candid feedback is no.
But it's a political choice because, especially in a day and age like this, they're talking about 40-year mortgages. How else are people supposed? We keep this game going because it gives homeowners the clarity to kind of own this. This is the biggest investment decision that they make.
It is, but we're an outlier in the United States compared to everywhere else in the world. Who else has 30-year mortgages? And we couldn't have 30-year mortgages unless the government was willing to backstop them.